Good morning, everybody. Welcome to another Daily Market brought to you by Mike York. Today is Thursday. It is April 2nd. Hope you guys are all safe and healthy so far. We got some big numbers today to look at. Again, this is the week for job numbers, and today will be day two of those job numbers, and that is the weekly jobless claims. Tomorrow we'll get the Bureau of Labor Statistics numbers, which will be a big reading, but may not carry the full weight of the or scope of what we're currently dealing with, primarily because those numbers, a lot of their, with the modeling and everything else, a lot of those numbers are done just before we really, well, forgive the phrase, but when the shit hit the fan, so to speak. Uh, Basically, the 12th is kind of when they get the modeling numbers done. So most of that data is coming in before that, just like our ADP numbers came in yesterday. But this is the amount of people that applied for unemployment last week, and the previous week was 3.3 million, which set a new record of people applying for unemployment. The previous record was 695,000 back in '82, and then the highest we had seen that during the credit crisis was at 655. Uh, Forecast would account for about 4 million, and it basically doubled from the previous week to 6.6 million. So if you look at that, basically in 2 weeks we had 10 million people apply for unemployment, and this is only expected to get worse as we go go on. For highly condensed areas, California and New York are pretty low in terms of what's out there in these jobless claims. So we do expect this to rise much more rapidly. On another note, we got the factory orders back in January. It dropped by 0.5%. Forecasts were calling for a 0.2% increase in factory orders, but basically just went nil in February here. So we'll jump ahead to the headline news. The stocks are up. So why are stocks up on news of bad job numbers here? Because basically the headline news is there was agreement reached between Saudi Arabia and Russia over the production. They're expected to at least pull back 10 million barrels per day, perhaps more, and help bring prices or stabilize the pricing in the oil industry. So in energy sector. So the basically got to the point where it's about $20 a gallon now. So basically, a few months, basically we dropped two-thirds of its price. So, I mean, it wasn't that long ago, like around January, I think it was. It was up to between $50 and $60 a barrel. Now we're down to like $20 a barrel. Unfortunately, us consumers are sitting at home and we're unable to take advantage of the gas prices and go anywhere. So that's the unfortunate aspect of this. For us, anyways, as a selfish standpoint here. So let's jump ahead, see how this is playing out in the bond market. Bond market is actually up about 20 basis points. We went down a little bit. We're actually closed slightly up. I think we closed up like 5 basis points yesterday. Today we're up about 28 basis points. The good thing about this week compared to last week was that the Fed was really propping up the rates, which is why we had this uh, high amount of MBS was driving going up so much rapidly, and then on top of that, you had these other traders up there piggybacking on that, so it was exacerbating it. So we saw that Monday where they thought they were going to do it. They had it scheduled for uh, much higher, and they basically came in much lower. They've been doing about half of what the plan was in terms of what they were going to purchase in mortgage-backed securities. So it's kind of helping stabilize, and that's important for us because it's helping with uh, the shorts that we have in there, and which is kind of hurting lenders and trying to get through their pipeline of loans through the get those loans through the pipeline. And so as we get those through, hopefully we'll see some normal pricing. But as of right now, we have to kind of bide our time and wait through those cycles to go through. So right now, of course, mortgage-backed securities should improve technically speaking, but again, these are abnormal times right now, and of course, the media is out there saying we're at the best levels ever, but unfortunately, yes, on mortgage-backed security and technical level, that is correct, but the lenders are not pricing that way. Uh, so if you guys are watching this, spread that word because unfortunately, uh, media is out there and saying these are the best, lowest prices ever. And again, if you look at the mortgage-backed securities, it should be, but with the issues that are going on with the mortgage industry, right, prices were rose as a result. And if you guys have been watching these videos for a while, you'll understand why. So let's kind of jump ahead here. Yields are uh, started the morning off lower, but right now they're sitting at about 0.6% right now. Yesterday we were down about 0.6, but rose a little bit for the day. Now we start even further down, like 10 basis points, and then rose up a little bit. So now we're up about 0.6 currently at the moment here. So another thing I came across yesterday, pretty interesting bit for guideline restrictions. So if you're a real estate investor, this is going to be more difficult for you guys because a lot of because of the forbearance issue, the concerns over forbearance, they are not allowing investors to use rental income as part of their income calculations. So if you have an investment property, you get income from that. We can't include that in your income. The only way you may be able to include, there may be some lessors that put some other caveats into it, is they are allowing you, if you show that you have in reserve accounts, like extra funds in your savings or retirement, whatever, that you have at least 6 months worth of housing payments in there. Otherwise, you get hit with that full housing payment against you without using the income to help offset that. So just be aware of what some of these new guidelines are and why it's going to be a little bit more difficult to get a loan if you have any real estate investment properties at this point. All right, folks. So that's pretty much the wrap. If you guys are in California looking to buy or refinance, please reach out. Best way to reach me is direct message me or email me. Email is the quickest response for me. I do get a little tied up, so I don't always be able to answer the phone. So if you are out there, again, direct message me or email me are the best ways to get a hold of me. And for the quick response, email is the best. All right, you guys have a great rest of your day. We'll see you guys in tomorrow's video. Bye-bye.